Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet. All Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. Happy Thanksgiving, and we have a great episode for you today. Rob Hamilton, CEO and co-founder of Anchorwatch, a Bitcoin insurance and custody company. He is our guest. He is a repeat guest, and we're going to talk with Rob about primarily how would the U.S. government secure and store a strategic Bitcoin reserve if it chose to. We'll also catch up with Rob about what's going on at Anchorwatch. They're now a Lloyd's of London cover holder. And we'll talk about Bitcoin development and what might be next for the world's largest and oldest cryptocurrency network. We'll also check with our good friend Bimnet Abibi about markets, as always. And before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Man, we're in the fun time. Things are getting wild. Bitcoin's been volatile. We were up a lot, then we were down a little. Now we're kind of back in the middle. And I hope everybody has a great time talking about Bitcoin and crypto markets with all of their relatives at Thanksgiving, and that you enjoy your Thanksgiving. Let's get right into the show. Let's go now to our guest and friend, Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome back to Galaxy Brains.
Thanks for having me.
So we did last week. You cautioned to our audience that Bitcoin felt like it was at max euphoria, and that it was very possible, if not likely, that a correction was incoming. We did end up getting that correction, presuming that it may be over at this point. But last Friday, Bitcoin was nearing 100K. But then over the weekend and into the beginning of this week, dipped as much as 9% down to 91.5. Now, as we record on Wednesday, November 27th, it's around 96K. But so what's your reaction to that market action?
Yeah, I think it was a very healthy sort of response in the marketplace. I think things were a bit too stretched from a positioning standpoint. You could see that in funding levels. You could see that in implied vols. In addition, you just had so much good news that ended up being baked into the market with respect to the ETF options having launched. That was a positive catalyst that got priced into the market. You've had the administration Trump news. That's kind of been baked in. You had more optimism around a Bitcoin reserve or strategic stockpile, however you want to think about that. And so it was a market that was at resistance at very stretched positioning levels that really didn't have any kind of much more near-term catalysts to price in. So I think the reaction was healthy, and the subsequent price action after the correction to basically 91K has been a pretty nice rebound. And historically, that's symptomatic of an asset that is getting more institutionalized. From the standpoint that institutions are the types of folks that do buy on dips, and the dip, given how much we'd run up, was very healthy. And as you've highlighted in some of your reporting, Bitcoin does tend to correct like 10 to 20% in bull markets, and so seeing a roughly 9-10% correction in Bitcoin is perfectly kind of reasonable. I would like to highlight, though, that you have had kind of a little dent in the monetary debasement sort of argument with the appointment of Scott Bessent. Uh, his philosophy is kind of based on a 3-3-3 plan. Get GDP growth to nominal GDP growth to sustain around 3%, 3 million more barrels of oil per day. In addition to a debt to GDP ratio of 3%. And, I think we're running close deficits that are close to like 6+% right now. And so, that all kind of suggests that Trump might and Doge, like the government efficiency program, et cetera. That all suggests that the fiscal path of the U.S. might be a little bit better than what folks had anticipated. And so you saw things like gold retrace like 3+%. And so it wasn't shocking to me that the day of or day after you had that correction in gold, you saw something similar in Bitcoin. But broadly speaking, besides that macro kind of tailwind, the broader sort of setup in macro markets is still supportive of Bitcoin higher. Equities are trading, close to all-time highs. They're in a very strong seasonal period. You do have an aggressive amount of tech stock buybacks that are continued to expected to continue to happen over the course of the next month. I think you're expected to also get a little bit more systemic flows from the fact that vol has come down in the S&P, pretty meaningfully, and so that generally leads to increased buying by CTA types, etc. And so, uh, and in terms of the Fed policy, I think it's still a coin flip whether or not they cut in the December meeting, but I'm inclined to think that they will cut, and that's the language you've heard out of the Fed. And so, you've got a Fed that's continuing its easing cycle. You've got equity markets that are trading well, and so I do think that's going to be conducive for price appreciation in crypto on a go forward.
Yep, I think that's really astute analysis. I think one thing I wanted to ask you about, there's been charts going around a lot. I made one of the global M2 versus Bitcoin price. Over a very long time frame, they look to be pretty well correlated, right? When sort of money supply contracts, Bitcoin. By the way, I think you could probably overlay like S&P on it, and it would also seem to correlate decently well. But we just got the prints from the St. Louis Fed on the US M2, and we got China. We don't have Europe yet for the end of month October, even though I don't know why central banks need 27 days to publish this data. But anyway, it's contracting a little bit while Bitcoin has been ripping. Obviously, Bitcoin ripping for sort of idiosyncratic Bitcoin market reasons, namely the Trump victory and anticipated positive attitude. But should we take anything into that contracting M2 just on a month over month basis, or how should we think about that?
No, I mean, I think I would be looking at those charts like on a much wider time horizon and kind of be thinking about like when is the Fed ultimately going to be forced to do some form of QE. I do think that the bellwether for global money is kind of the U.S. They're kind of the giant in the room. And so, what I'd be most closely watching is just, whether or not that the Fed, resumes asset purchases at some point or does some kind of operation twist, et cetera. Uh, but high level, you're absolutely right. The level of money that's created in the system, the velocity of it, et cetera, does have an impact on risk assets. And generally speaking, when you increase the money supply, in theory, scarce resources should be worth more. Um, but yeah, I mean, if you're really thinking about the thesis behind Bitcoin, it's that over the next 10 years, M2 has nowhere else to go but higher. Right. And so if you're really thinking about it as like a decade long investment or a multi decade investment that belongs in real institutional portfolios, I think that the trend is very clear. And ultimately, like, if the fiscal situation in the US and the rest of the world stays where it is currently, which I think it will. Like I don't think a reduction of US debt to GDP down to 3% is feasible in our current political economy. And so if you just do the math of running deficits that are this big at these high interest rates over time, that will definitely require monetization of some of the debt that the US has. And so ultimately, I think that chart is spot on. That assets will continue to appreciate as long as there's money being printed. So yeah, I'm a fan of that analysis, but I just think that you really have to frame it in kind of the next 5 or 10 years context.
Makes a lot of sense. Let's leave it there for now. We'll check in next week. Everybody, I hope is having a great Thanksgiving, and that you do too, my friend Bimneta Bibi from Galaxy Trading. As always, thank you so much. Let's go now to our guest, Rob Hamilton, co-founder and CEO of Anchorwatch. Rob, welcome back to Galaxy Brains.
Thank you for having me back again. It's an illustrious list of the people who do the 2 times on the
It's
Galaxy
very
Brains,
rare.
hitting both
Yeah,
hemispheres of the brain.
the last time you were on, had a good rap. I said, our guest makes new money, call him Hamilton Rob. And you are working on new money. Anchorwatch, a Bitcoin custody and insurance company. You guys just had a big announcement that you are now a Lloyd's of London cover holder. I know virtually nothing about insurance, Rob, so explain to me what that means.
Absolutely. Yeah. So ultimately, at the end of the day, just to click back a little context, us at Anchorwatch, our vision is being able to offer insured custody for Bitcoin and cold storage. Now, ultimately, when you're talking about insurance, the most important question anyone who's savvy says, well, okay, who's providing the insurance capital, like the actual capital to back it, right? Insurance is not one of the things that you could just kind of like stand up in your basement. It's a heavily regulated industry, maybe second to banking, where you need to understand, okay, someone is allocating capital for in the event that there is a loss, someone would be able to pay you out, right? And this works in all forms of insurance today. Uh, Lloyd's of London is the oldest, most historic kind of continuous insurance operation. The way I explain it to it sometimes in lay terms is that you have the New York Stock Exchange and everyone's kind of like on the stock floor and they're trading shares and stuff. Lloyd's of London is somewhat like that, but they're trading risk, right? Property, and that takes home, auto, what we kind of fall into, which is called specie, which you would put maybe most akin to like rare art or gold and silver, right? Physical assets which have material value, and then you also have health and life insurance and all these different vectors, right? And so with the announcement that we are now Lloyd's of London cover holders, we are now actually when as managing general agents, we we have a customer that gets onboarded, we go through underwriting with them, and when we issue that insurance policy, it is underwritten by syndicates at Lloyd's of London, which basically means groups of insurance carriers that have come together to decide that they are willing to underwrite this risk. And what's really exciting, especially with working with Lloyd's of London, is kind of the capacity and the scope and scale of what we're able to provide, up to $100 million per customer, right? That allows us to be able to hit like large enterprise scales of businesses that are looking to have exposure to Bitcoin and know that you don't have to worry about counterparty risk in the same traditional sense, because insurance at the end of the day is risk transference, right? So our policies cover, what's really unique, just as a quick little like wink into what we're talking about in the future, is leveraging Bitcoin native smart contracts. And this allows us to actually have your Bitcoin UTXO on the insurance policy with your name, right? So there's a direct link rather than there being maybe a third party policy or an omnibus policy and kind of some sort of uncertainty in kind of the direct link of like the right to file for claims and being able to get paid out for claims. This is a first in its kind ability to do this, not only for enterprise customers, but as well as retail customers directly too, right? So this is something that's been well over a year in the making. And a huge shout out to my co-founder, Becca, who has been leading the charge on the insurance side and getting this all stood up. It's been a really long and hard march and commitment on our side, and we're really excited to be able to announce that.
I love it. And in part of building this company, you guys have built a powerful wallet. You're wearing the mini script t-shirt now because you're ensuring people's self-custody, right? You're not having to, it's one thing if an exchange has insurance on their hot wallet. Typically that's the only place they actually have it, not on everything they store. um that's would be subject to like user error, right? Like if I've got a bit key right here, right? Like my own hardware wallet. Like if I screw this up, like
Mm-hmm.
it's my fault. I shouldn't get paid out. You guys sort of mitigate and protect against that with your own wallet. Talk a little bit about that.
Absolutely, yeah. So Bitcoin has had a long-standing tradition of self-custody, and with self-custody on the insurance side, actually comes with this concept of self-insurance, right? You're owning all of the risk. So if you have your BitKey, you're using your ledger and your cold cards, you're using whatever else, and you mess up, there's no one to go to for recourse, right? It's the end of the, it's kind of your own ultimate responsibility, and that is self-insuring. You're owning all of that risk. Now, what we built at Anchorwatch is leveraging Bitcoin native smart contracts using a library called Miniscript, which we talked about last time when we were on the pod. If you want to go deep into that, there's plenty to talk about there. But it allows us to do more advanced custody. And it's almost this model of joint custody. So this is where it gets really interesting on what we think is a unique differentiator of what we're doing is you have this traditional financial contract of insurance, and we're actually anchoring it on chain to a Bitcoin native smart contract by leveraging things like time locks. And the way this just very conceptually can work is that for the length of your insurance policy, both you as the customer as well as Anchorwatch must sign, right? We cannot unilaterally move the funds. You cannot unilaterally move the funds. We call this kind of this concept of negative control, where we can never positively dictate where funds go, but we can prevent them from going places, right? So you can start seeing on the insurance and risk side how that starts mitigating a lot of concerns, right? If someone stole your wallet and tried signing your money away to some random address you had never used before, we would be able to flag that and just not sign. Additionally, if you as the customer actually lost all of your keys, within that last month before your insurance policy expires, we work with a third party recovery partner to be able to offer you the ability to return those funds right back to you, right? And this is all kind of tied into the insurance contract, as that's kind of our obligation, where if you lose all of your keys, we're able to reconstitute the funds and give them back to you. And this really is a first in its kind of anchoring the Bitcoin script itself to a legal contract in a really clean way. And this also ties into at the end of the insurance policy, let's say you choose to renew, you're not interested anymore. One, we will happily help you, move the funds out of its way. But for whatever reason, let's say Anchorwatch doesn't exist anymore. At the end of the insurance contract, when we no longer have liability, there's no existing relationship, you as the customer can unilaterally move the funds by yourself, right? And that's really something that is only now possible because of leveraging something like Miniscript in our product we call Trident Vault for this multi-pronged security. It's a whole new paradigm shift too, because there's now multiple ways your Bitcoin can be spent over time. If you think about like a really large bank vault, if you go in to access it, they often have timer cooldowns. Okay, you just typed in the pin and you like swipe the key slots. You have to wait an hour before the vault opens, right? Like this forced delay with time as a security element is a really critical part of just securing physical assets in general, and we're able to extend that into Bitcoin.
I love it. I think it's extremely powerful technology.
No, it's really great. And on the insurance side, what's really exciting is that if you were a customer and you had some sort of incident, and we have maybe 100 other customers, your issue is not co-locating the risk with everyone else, right? Whereas if you're a custodian and there's an issue at that single custodian, they're holding everyone's keys, you have this risk of ruin where if one if party has an error, there's a cascading loss everywhere. Whereas this allows us to do the risk distribution in a really compelling way that hasn't been done before in the market. And that's what's allowing us to be able to partner with Lloyd's, have these larger scale policies, because if business A has an issue, that doesn't impact the risk of business B, which is really critical if you think about home insurance. Today, the way crypto insurance works is like there's like 3, maybe 5 big skyscrapers, and that's where all the risk is. Right. And so there gets to a certain point from a risk appetite where you don't want to keep on allocating into the same building over and over and over again. So this distribution of keys tying with distribution of risk, we think is a really compelling business model to be able to innovate in the industry.
Yeah, I think it is quite compelling, and figuring out how to bring big dollar insurance money into something as still niche as self custody is super interesting. I mean, people have been mitigating the risk of self loss of self custody with things like collaborative custody with like Unchained or Casa or Thea, but no real way to insure against that loss. And this is super interesting. It raises one of the reasons I wanted to have you on here, Rob, this time, in addition to talking about that big news, was the discussions of a strategic Bitcoin reserve. President now elect Trump announced in Nashville that it's actually a great part of his speech in July when he said something that every Bitcoiner knows: never sell your Bitcoin. And so the US government, he said, would create a national Bitcoin stockpile by not selling the Bitcoin that it already currently has. However, that language seemed pretty well tailored to not say reserve, but there is growing discussion, great works being written by the Bitcoin Policy Institute about the strategic reserve. You have the Bitcoin Act introduced by Senator Cynthia Lummis. Lots of discussion about it. I saw just today, Christian Carlo was on Fox News saying that he is a supporter of the Bitcoin strategic reserve, and he's reportedly in the run for this crypto czar role. So anyway, whether or not it happens, it's being talked about a lot more. Brazil, there was legislation introduced this week I saw to set up their own strategic Bitcoin reserve. If the US government, this is what I want to get into, this is a big question, but let's talk this out, Rob, as somebody who does self-custody, highly secure, using cutting edge Bitcoin technology. If the US government was to create a strategic Bitcoin reserve, how should they store it? How should they secure it in your mind? I don't know, maybe start if there's some guiding principles that you have.
Yeah, there's a couple. So the idea first is you want to have distribution of keys, which distributes risk, right? Let's take it to the extreme simple example of the absurd simple example of there's just a hardware wallet sitting on in like the president-elect's desk, right? Not saying he would do that, right? But like that would be the one thing. But that one key then is holding all of that risk, and if something goes wrong or that key gets compromised, everything's gone, right? This is where the first layer was what I call like legacy multi-sig, is where you maybe have two of three. Maybe you have a key that's held by the president, right? As the way our constitution works is the executive branch is responsible for the deployment of funds, but Congress allocates those funds, right? The appropriation from the House of Representatives kind of sets the budget and kind of the spending, which then goes to the executive branch to make all their decisions. So possibly you would have a very simple setup would be maybe a key held by the Speaker of the House, a key held by the Majority Leader in the Senate, and then maybe a key held by the President, right? Like this is just kind of going down this spectrum. If I were to do it all as self custody, I think ultimately, for like pragmatically, how things will start is that there may be keys that are just held across different institutions. Maybe you have some held at Coinbase, some held at Kraken, right? You can go down the list. Maybe there's like a distribution of risk in that sense. Ideally, though, I think since this is the government's Bitcoin, they should be leading first and thinking about the securing of the keys in house. And then you can go down. I've had a lot of fun theory crafting, time locking, right? The last thing I want to have happen is every 4 years when there's a change of power, if one administration wants more Bitcoin, they're buying it, and then the administration changes hands and then they're selling it immediately. This gets interestingly into how long I think there should be a time lock. I think the numbers I start thinking of are 12 years and 24 years. And to explain why, 12 years is 3 presidential cycles. So you know for a fact Bitcoin that's being put into the reserve is absolutely not going to be, for the rest of your time of being president, accessible, right? This is something that's going to a future administration. And at the time it's being put in there, you don't know to which party. The other 24, I say, the reason why I say 12 is because of that, but also the Senate cycles out elections every 6 years, right? So I'm finding multiples of 4 and 6, and that would actually pump me up to 24 years, right? I love the idea of, kind of long-standing shifts and changes of government to be able to do this. And then from there, you could actually have kind of leveraging Miniscript, the tech that we use at Trident Vault, you could have multi-sigs of multi-sigs. So you could have you could have the Treasury Secretary, the President, the Vice President, Secretary of Commerce, and you could throw one more member of the executive branch in there. And that could be a 3 of 5 just for the executive branch. And then Congress has to co-sign it. And then I actually think back to President Andrew Jackson. He has this famous quote he once said, John Marshall has made his decision, now let him enforce it. Ultimately, if there's a disagreement in how things get executed, I think the Supreme Court should have its own 5 of 9 multisig for the majority of the justices to be able to actually rule in this as well. So this gets into like the out there theory crafting. If I were to be president and I were to try and instantiate this, I would think about every article branch of the government, Article 1, the president, or Congress, Article 2, the president, Article 3 of the Supreme Court and the judiciary should each have their own control. And that allows you to be able to have making sure that the constitutional process for the appropriation of funds are being done. Because last thing you want to have is that, Congress passes a law and then there's a disagreement. You need to have the courts to be able to rule on, are they interpreting it correctly? That's the part of like the court system. So they also need to hold keys too. And what I love about this is distribution of keys in so many places that you're fragmenting the ability for rogue actors to be able to come in and just steal the funds.
Yeah, I love the idea. I do think, as someone who loves the American Constitution and our system of checks and balances, having a 2 of 3 multi-sig, at least at the top level between the 3 branches of government, makes a lot of sense. But I just don't think there's no precedent for the Supreme Court to actually like affirmatively do something, to your point about Andrew Jackson's quote. But this kind of also does feel like a ruling like signing a message, like agreeing with
Right.
one branch or the other actually does kind of fit. It does sort of feel like they're passing a judgment. If the executive branch comes and says, we want to sell,
Right.
and the Congress says, no, we want to hodl, then the Supreme Court kind of is the party that gets to adjudicate that theoretically.
That's exactly right. That's exactly right. Yeah, that's why I love about it is that there's always been this kind of principal agent like problem where the court can make a ruling, but the court just makes a ruling. It doesn't have a large police force. It can't enforce the laws. That goes back to the executive branch. And what's the powerful tool of the asymmetry that cryptography has is you could actually make it binding, right? And as long as and you can think about this from a legal process perspective, as long as Congress would instantiate that the Supreme Court has the right to do this, then it's kind of part of the law and it's all kind of binding, right? So there's a lot of operational overhead with all of this. I'm thinking about in a hyper Bitcoinized world, this is how I think the best way of doing it, where you want to have the Bitcoin smart contract represent our constitutional order.
Yeah, I think you want to instantiate it on chain effectively in the Bitcoin network itself. Yeah, it'd be
Right.
tricky. Like, we were thinking about like, okay, let's say Congress has one key, right? I love the idea of both houses.
Sure.
You could have a 2 of 2 multi-sig that rolls up into a one single key. And so it's sort of like the two houses have to effectively pass a law to agree. And so you could have the speaker and the majority leader, or even the president of the Senate, quote unquote. But then it's maybe like, is it like it's like the congressional sergeant of arms, maybe it's like the head of the Capitol Police or something is the final signer for them. I don't know where Congress, like in aggregate, stores sensitive material,
Well, so Congress, like both houses of Congress have committees, right? So you can think about there's a Senate banking committee, there's a House Financial Services committee, right? You could start seeing where committee leaders would be able to kind of roll up and hold some additional authority as well. And to your point about combining these keys, this is like a little bit of like a nod towards the technical of what's possible in Bitcoin. You actually could leverage Taproot, and you can do signature aggregation. So you could have one House of Representatives key, and it actually rolls up across all of these behind the scenes, and it's just one signature on chain. That's all things that are possible as well. I think that's really like the design space is wide and open, and I think this is coming to an interesting inflection of the nature of government and the nature of Bitcoin is that it's a physical bearer asset. So what we used to do is we used to have Fort Knox, right? And you would keep all the gold, and the military would help protect it too, right? But you don't want the military to have this unilateral control of ability to spend funds. So maybe they hold some of the backups, and maybe those are kind of time locked keys. So you never want to be in a position where the military can just go and take all of the money unilaterally. But this is where all the game theory starts going in there. I think it's it's something that's incrementalist. I think over time it happens. I would be extremely excited if the US government itself was self-custodying the funds. They could even distribute it in a joint custody model where Anchorwatch or anyone else could hold some keys that must also sign, and then you don't have to worry about all of the keys sitting at one place. I think this idea of distributing keys to distribute risk and have this certainty and leveraging time locks so you have contingencies if keys become incapacitated or destroyed to be able to make sure the funds are recoverable. I think it's exciting, bright red, white, blue, and orange future for us in America.
I think so too. It's quite a fun problem. I do think it's very likely that if the government decides to store Bitcoin strategically, whether it's a reserve asset or just a commodity stockpile, strategic commodity stockpile, they should take custody of it directly. I think right now the U.S. Marshals, this was I think publicly reported, primarily store at Coinbase. But the thing with that is that that's because the U.S. Marshals perpetually intend to sell, right? Like, and they may even be required by law to sell.
That's right.
And I don't think it makes any sense.
I believe so.
Pretty much no country stores strategic, certainly reserve assets with like a third party company. I mean, sometimes they rely on things like their central bank or even the New York Fed to hold gold or whatever. But it does make sense for strategic assets to be held inside your borders by your nation. I mean, in general, right? So I think it's very important. Here's a question for you though, too. Let's say they self-custody, which I think we agree, regardless of the setup, would be the correct way to do it. And by the way, the setup, if they do it, is going to be huge. They're going to call in, I would assume, the world's smartest Bitcoin custody designers to help figure this out, because there's a lot of ways to do it. But if they did it, could they insure it?
I think, yeah. So the question would be of how much, right? So the insurance market for crypto in aggregate today is maybe $3 to $5 billion if you count up all of the big policies that are out there. Maybe it's 3 to 5 billion, and this goes to the point that insurance is a marketplace, right? So you have people who are looking to get things insured, and you're looking for capital providers to be able to provide that underlying Bitcoin to underwrite it. Now, there's an interesting dynamic here where insurance carriers today in the United States are not Bitcoin is. So I'll take a step back here. So insurance in the United States, going back to our constitutional order, is state regulated. This is actually a fun artifact of like the FDR New Deal era. This was something that was attempted to be put at the federal level, but it was one of the few things FDR wasn't able to wrap his arms around in the Great New Deal, in the Big New Deal. So it's actually state regulated. And so the way insurance laws work in the United States, each of the 50 states plus DC plus Puerto Rico, Guam, and every single territory has their own rules for insurance. And they have a single person, the insurance commissioner, who is the one responsible for administering the rules within that state. Now, all of those states come together in what's called the National Association of Insurance Commissioners, and they designate the quality of assets for your balance sheet, right? So this is different from maybe FASB if you're thinking about like from an accounting book standpoint. Insurance companies need to have a certain amount of capitalized reserves in their ability for the amount of risk that they're writing to be able to pay out claims. And what you hold that your reserve in as an insurance company gets rated based on the perceived risk of that asset. Up to today, Bitcoin is something what's called a non-admitted asset. An admitted asset, like the top tier, you'd think it is actually it's U.S. Treasuries, right? U.S. government debt is the top ranked asset an insurance company can have. Bitcoin as a non-admitted asset, actually you get 0 cents on the dollar. So if you bought Bitcoin as an insurance company for your capitalization rules and laws as it relates to being an insurance company, today you get 100% of that removed from your reserve ratios, which in the nature of insurance is you have a certain amount of reserves and you can write a certain amount above that. It has massive impacts on the leverage that's able to be undertaken for the risk you can write. So most insurance companies to this date do not do that. So the first move would be having the National Association of Insurance Commissioners revisiting Bitcoin and realizing that this is a physical bearer asset. It is a highly liquid market that trades 24/7, 365. It's maybe some of the best collateral we've ever seen. While it may be volatile, discounting it to 100% of the value being not counted for reserves is not likely the right number. I think it should be much higher than that. Uh, and so once you have Bitcoin being held on insurance company balance sheets, you could actually do Bitcoin denominated insurance, right? Because this is the actual open question is, let's say the US government has $200,000 worth of Bitcoin. You need to have insurance companies that are holding that Bitcoin on their own balance sheets to be able to insure it. Now, as one shout out, there's one domicile of Bermuda, which actually has their own regulatory framework where you can use Bitcoin and crypto as part of your insurance collateral and do Bitcoin denominated and crypto denominated policies. That's not quite the case of how things work today. Us at Anchorwatch, we're starting with US dollars, right? Our policies are denominated in US dollars. And this is where I think the larger vision of as Bitcoin continues to kind of eat into the traditional financial system and gets financialized through the larger banking infrastructure, insurance is going to be close behind it because it just naturally makes sense is that you want insurance for assets. We have something like the FDIC for bank accounts in the United States. That is a government mandated and kind of managed program. But private market insurance is, I think, is very foundational to a free, healthy operating economy. And as more people want to hold Bitcoin, they want insurance for the actual underlying spot in the asset that they're holding it in, right? So you'd pay your premiums in Bitcoin, claims would be paid out in Bitcoin, right? This is all, I think, part of like over time. If on day one, if we had 200,000 Bitcoin, that would not be insurable because there just isn't the Bitcoin on the insurance side balance sheet. But that provides an interesting opportunity for insurance companies to allocate and being able to start having Bitcoin as part of their reserve. So over time, that this asset could actually be paid out.
Yeah, it does. According to Arkham Intelligence, the US government currently holds 208,000 Bitcoin worth about $20 billion. So, and it is true. I hear you. If I self custody Bitcoin and get insurance on that self custody and somehow it's lost and the insurance is going to pay me out, I don't want the dollarized value of the Bitcoin. I want the Bitcoin, presumably. Like that's why I was self custodying in the first place. It's one thing if you own the ETFs, like you're really just getting dollar exposure to Bitcoin. That's tricky because then the insurance companies don't have the Bitcoin to pay you out with.
Yeah, and that's kind of like if you think about like my my multi-decade like long-term vision for Anchorwatch is something like that, being able to be kind of at the tip of the spear, not just on the technology and the understanding of the asset, but being able to structure and capitalize an insurance carrier balance sheet in such a way that this could all be managed really well. And that this is kind of going towards a future where if you and I believe that Bitcoin is the best money that's ever existed, insurance markets are going to be natural followers in wanting to make sure that they can provide that for the actual asset itself.
It's super interesting. Do you think, just stepping back a little bit, I mean, I mentioned this, like some legislators in Brazil have introduced a bill on a strategic reserve. I saw that Morocco, which had banned crypto in 2017, has introduced measures to totally legalize crypto. So not a strategic reserve. It seems to me the nation state game theory is going to heat up a lot here. To at least establish favorable rules to compete in this market, if not also do a strategic reserve. Like, do you think we're heading into a world where even the US considering it, let alone just easing on the regulatory side or changing the posture, is going to lead to competition?
I would say so. This is part of the game theory of Bitcoin. And I think Michael Bitstein on Twitter phrased it as the only winning move is to play. Right. And so when you're in a global economy with many different actors and their own motivations, it makes sense to just get that exposure. And I know there's been rumblings and rumors of, is there going to be someone in the Gulf region that's going to be announcing reserves soon? This is all part of that. Everyone trying to find a new way to be able to have, basically their own balance sheet as countries, mitigating risk and understanding, you know changes in just kind of how the global economy works. People want to have Bitcoin as a way to mitigate their uncertainties for other reserve assets. And I think this is just part of that natural inclination of, first they laugh at you, then they fight at you, and then you win. And it's funny. This is part of Bitcoin's just kind of ascendancy of being financialized. And I think it was, for a lot of us crazies, we thought it was inevitable, but even for some of us, we didn't think it happened this fast.
No, it's a step function change, it feels like, with this new administration, and all the discussion
Yes.
of it. I mean, honestly, even whether or not a strategic reserve or stockpile even happens, I feel like merely the discussion alone is just, it really levels Bitcoin up in the type of conversation people will have about it. Um, it's surprising. We're in this period right now, by the way, in the market where we
The
all
Overton window
know
has shifted.
it absolutely has shifted, and we all know there is potentially this huge pile of positive catalysts coming in the new administration, but we're not there yet. And so the market is trying to price that. And that's
Mhm.
why you see a 50% rise
Mhm.
from, election to today, or just prior to the election to today. It's also why you see volatility in general. Like, I mean, as we talk, we're down 5 or 6% from the all-time high. We were down as much as 9. People aren't really sure. It's sort of, to me, I wonder if like the market will cool a bit and start reacting to actual policy once the new administration takes uh, office. Whereas right now, it's like you just got to be in it. You just don't know exactly what's going to happen, but you're pretty certain it's going to be positive. So if you're underexposed, the risk is to the upside. I wonder if when these things start, for example, if they come out and say, well, it's not a reserve and we're going to end up probably just like hodling like 50,000 Bitcoin from that we got from, the Silk Road, uh, and not certainly not Bitfinex's Bitcoin or whatever, then it's going to feel like it underwhelms in the end.
Right. I think there's definitely uncertainty of the mechanics of how this is all going to go live. This is a first time, I think, in modern history there's been a reevaluation of what constitutes a reserve asset for governments. Right. We've always had dollars, and we've had oil, and we've had gold, and I think this is now the first time in a very long time where we're revisiting what would it even look like to kind of structure this. Whether it comes through legislation, does it come through executive orders, is it a blend of both? Right. Kind of like feeling this out. There's been a lot of great work trying to scope out how this would actually be executed upon. But the upside is that individual companies are starting to kind of see this and also make their own plays, right? I think one of the big headline news in the past couple of weeks has been MicroStrategy, and not just its own price ascendancy run, but tying it back to insurance. One of the largest insurance carriers in the world, Allianz, has been buying these MicroStrategy convertible bonds. And you start getting an understanding to the conversation earlier about admitted assets. If they're buying these publicly traded companies, convertible debt notes, that is not being written down to 0%. Convertible bonds are an admitted asset. It may not be ranked dollar to dollar like it is for a US Treasury, but they're now being able to maintain a position on their balance sheet to write additional risk and also get the convertible upside of Bitcoin and the downside protection of, since it's a bond, it's senior to all the equity holders. It gives them a really interesting risk asymmetry for being those first movers to kind of enter the marketplace and using Bitcoin. And so not just US governments, but corporations, including insurance companies, are now understanding the ability to integrate Bitcoin into their own balance sheets, to their own vehicles. And not everyone's going to be buying spot in the same way or holding it directly themselves. But this has just been a really exciting development, seeing everyone in larger trading desks and larger institutions and things like insurance are actually stepping in now and realizing that there is a role for Bitcoin on their balance sheet in some way or form.
Yeah, very interesting. All right, Rob, before we split, I want to ask you about some chatter around Bitcoin development because it is relevant here. For example, I think some of the big discussions of possible
Mm-hmm.
new upgrades to Bitcoin involve one of the core use cases that they involve, a variety of them, are vaults, right? So you have James O'Byrne's op vault, you've got Jeremy
Right.
Rubin's op check template verify, op CTV. You've got opcat, which is the concatenation opcode that Satoshi created originally but removed, which could also be used to make vaults, among other things.
Yep.
Vaults could be used to help build better bridges between Bitcoin and its L2s. Are you hearing anything? I've seen a little bit of like increased acceptance of opcat from some of the key developers. I even saw Luke Dash Jr. talking about possibly an OpCTV upgrade sooner rather than later. And we all know that if Luke is Luke kind of represents maybe the sort of like ossification right wing of Bitcoin in a way. What are you hearing about, or think, or even just what's your opinion on, I don't know, the likelihood that a new Bitcoin upgrade could be in the near to medium future?
I think this is part of the way I optimistically look at it is part of the healing process of the Bitcoin developer and the Bitcoin cultural community, as however you can ambiguously define that. And there was a reaction to, we're not really going to change Bitcoin again. And as you mentioned, you have a lot of Bitcoin developers coming forward for either Opcat, CTV. And what's really interesting is that it's now an acceptable opinion, and people have put a lot of thought into this, and you're not immediately shot down for wanting to make changes to Bitcoin. So that's been an additional shift in just culturally talking about the Overton window and how to execute this stuff. You mentioned CTV. What's really interesting about CTV, one of the critiques of CTV up to this point has been it's a little too limited in the kind of covenants it can do. And so Stephen Roos, who's an engineer at Blockstream, I believe, has been working on this proposal called TX hash, which is a more advanced version of CTV, if you want to call it, more granular control. And he the other day announced that he's actually going to build on top of CTV. So without getting too deep into the mechanics, you could actually activate CTV, and then you could actually, within the same opcode, add TX hash down the line by kind of extending and building on top of CTV. And so having that kind of developer alignment on the main people who are thinking about how do we integrate and turn on these changes, working together and kind of unifying it under one opcode, maybe under different upgrades or maybe the same upgrade, provides a really strong framework for getting that developer mind span and attention working kind of all rowing in the same direction, which has always been, I would say one of the strengths of Bitcoin is that as a leaderless kind of like loosely coordinated movement of rough consensus, there isn't the one person you talk to turn things on. Right. So seeing the developers on that side getting things rolling is really exciting. Opcat is something that it's much more simpler for the base level implementation of the code being 11 lines, but it's almost like the Elmer's glue of a blockchain, being able to concatenate elements, and it may not seem that way up front. I know you've had Rendell on previously who's kind of talked about this. It can do more advanced covenants. It also can do things like zero knowledge proof rollup, like you mentioned, for bridging to other Bitcoin layer 2s and being able to have more advanced arbitrary computation still done in the constrained way Bitcoin does, but opening that door a lot more. There's a Bitcoin testnet called Inquisition, which I'm going to pull it up right now. Inquisition it's basically a Bitcoin testnet, but what they do is they actually turn on new opcodes for people to do testing. And I think Opcat recently had 80,000 transactions since they turned on the opcode to be able to use Opcat transactions. So there's a lot of developers building, trying to do things over there. which is just a fun development. Seeing that these niche test networks that have no economic value whatsoever have you have developers that are working on and kind of implementing and executing code there. So that's been a fun development in seeing how people are. You take something from a whiteboard idea. I think Rindell this time last year may have had one or two sample GitHub repos on how things you can do. Like he called them the perfect vaults to use OpCat for covenants and vaulting technology. That's all like seeing the explosion there is like a great development to see people are excited. They're tinkering. They're trying to figure out how this all works. You also have OpVault, which I'm a huge fan of because I just love the base primitive of making Bitcoin the most secure layer one money. Tying it back to how the government would hold things earlier, it would get orders of magnitude easier if you had an OpVault like construction because you can do this with OpCat and to a lesser extent CTV as well. You can have these kind of like windows where you withdraw it from the cold vault and it has to sit there for maybe a day, a week, however long you want before you can send it to the final destination. And during that time where it's kind of like on probation, you can sweep the funds back if it was an erroneous withdrawal, right? And I think that's something that just enabling Bitcoin as programmable money to make it easier for people to secure their own funds, I think is just a very valuable proposition to the network as a whole. But
I agree
all of the
completely.
developers are working now. And with just one last shout out for if Luke is thinking about doing this, I have my Ocean hat right here. He'd be able to turn on an activation client and have, since he also runs a mining pool, you could actually start seeing activation clients for this stuff in the near future across different clients like Bitcoin knots as well, right? So like getting someone like Luke open to this and kind of signaling that he believes something like a CTV should be turned on. Like he didn't talk specifics or details to be fair to him, but that warming of the opinions, so to speak, I would say is just really exciting time for developing in Bitcoin.
Absolutely. I think what he said in a discussion about maybe it was Ellen Hance, he was like, well, we could do CTV and then do a fast follow with Ellen Hance. And I was like, wait a sec, are you pro CTV now? Yeah, that ability to claw back funds in an intermediary point, like when they haven't actually been fully spent, is such a powerful primitive that vaults could offer. The funny thing about Op CTV is that Jeremy, I think, designed it as conservative as you could for exactly this reason. So that, and I remember a lot of the sort of broader Bitcoin world was maligning him for this idea that it had, I forget the terminology that it did, but it's effectively like perpetual covenants where like government could say you can't withdraw from Coinbase unless like we can revoke it forever. But actually, CTV expressly doesn't allow that. You can't even construct it that way. So he made it conservative to try to probably get it through more easily. But he was maligned for it being too powerful. But now people are saying, well, maybe we do want it, but it is too conservative. It's just the hive mind of the Bitcoin world is quite humorous to me sometimes.
Yeah, I think there's definitely some redemption. It's Jeremy season again. He's been working on his own project. I guess to those points specifically first, he did make it as minimally constrained as possible to try and appeal to the community. And that was somewhat, it's now too limited. Now it's not good enough, right? And I mentioned before with TX hash, like everyone's going to be able to have their cake and eat it too. Additionally, like thinking about what people are starting to find just in Bitcoin script land is that you're able to today effectively do covenants anyway. Whether there's a new primitive called hash collisions, hash collider covenants, where you basically, instead of mining proof of work, you could actually mine hash collisions and basically make a covenant restriction based on that. There's functional encryption, which Jeremy's working on with the CHAR network, CHAR. We're kind of in the kind of like delegates things off to HSMs and kind of secure like setups, but then you can effectively have this kind of functionality without having to fork or change anything today. And I think I just look at it ultimately and say that everyone's kind of reevaluating their priors and understanding if for being able to, whether your use case is vaulting, if your use case is for better scaling, being able to revisit all of these primitives is really important. And one last note on that, recursive covenants is the word you're looking for, is that the idea that you have a covenant that can infinitely refer to itself forever. There's two thoughts. One, you could have a CTV covenant that just goes 10 million steps down and it's not recursive because it definitively ends. But if it's locked effectively for as long as you're alive, it's de facto a recursive covenant anyway. And two, you could have this evil government set up where you basically say, oh, it's a 2 of 2 multisig. The government holds a key and you hold a key, and they just refuse to sign if you don't send it to the place they want, right? So this doomsday of like covenants being able to restrict people to doing that, you can already do that today. to be very clear,
Yeah.
right? Like it's not the reason why it doesn't exist is because people aren't looking to do that today. There's actually specific products that work on Liquid Network. Blockstream's AMP, like their approved asset management platform, is that it works exactly like that. Since you're trading securities on Liquid Network, you can't send it to any arbitrary location. You can only send it to other certified counterparties. So there's a co-signing service that implements that. So we're already seeing that the effective doomsday downside is something that just can be done with a 2 of 2 multisig today. So it's not really a fair representative critique of, on covenants on their own.
Yeah, it seemed like in general a pretty low level critique. I've got to leave it here, Rob, but congratulations on all the progress with Anchorwatch. I hope that if the government decides to self-custody a strategic Bitcoin reserve, they reach out to Anchorwatch for some help designing it. And thank you so much for coming back on Galaxy Brains, Rob Hamilton, CEO and co-founder of Anchorwatch.
Thanks for having me, Alex.
That's it for this week's episode of Galaxy Brains. Thanks to our guest, Rob Hamilton, CEO and co-founder of Anchorwatch, and our friend Bimnet Abibi from Galaxy Trading. Everyone have a safe and happy holiday weekend, and we will catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.